Meanwhile, in a largely unexpected move, the Bank of Korea slashed its key rate yet again by 25 basis points to 3%, while sharing somber economic prospects. Our correspondent Moon Hye-ryeon tells us why.
South Korea's central bank has lowered its benchmark interest rate by 25 basis points to 3% amid stagnant economic growth. The decision was announced on Thursday following the last Monetary Policy Committee meeting of the year.
Although exchange rates have become more volatile, inflation is stable, and household debt growth has slowed. However, downward pressure on growth has increased, so the Monetary Policy Committee decided to cut the interest rate further to help reduce these risks.
Last month, the BOK implemented a pivot in monetary policy for the first time in over 3 years, as it slashed the base rate by 25 basis points. The second rate cut in a row comes despite the weakening won against the greenback, following the re-election of former U.S. President Donald Trump, as the BOK focuses on economic conditions here at home. Economic growth in South Korea has been stunted this year, starting off strong with 1.3% GDP growth in the first quarter, followed by a 0.2% decline in the second quarter. Although the BOK had anticipated a turnaround in the third quarter as a predicted growth of 0.5% back in August, recent data show that it only came to 0.1%. As a result, the central bank revised its economic growth projections for this year and next year by 0.2 percentage points, from 2.4% to 2.2% for 2024 and from 2.1% to 1.9% for 2025. The BOK attributed the weakened economic growth to a slowdown in export growth and said that export growth is likely to fall short of initial expectations due to intensified competition and a possible rise in global trade protectionism. In an economic slowdown, lowering the interest rate can help boost consumption and investment, as well as reduce burdens on small businesses. Analysts say that further rate cuts could come in the near future, but this carries risks.
Lower future estimate for growth was the reason for lower interest rate, which means that there are higher possibility now that Bank of Korea will lower the rates. It may decide to lower the rates faster than it had previously signaled, but there are significant problems to lowering the interest rate. For example, it may strike a bubble in the Seoul housing market. It may increase household and corporate debt even higher.
Going forward, the Bank of Korea says it will continue to monitor economic growth and financial stability and thoroughly assess the impact of the rate cut on foreign exchange and other policy variables in order to determine the pace of further cuts in the future. Moon Hye-ryeon, Arirang News.